Heavy AI investments and tariff uncertainty putting pressure on some of the mega cap tech stocks over the last month. Joining us now, Doug Clinton, Intelligent Alpha founder and CEO. How bad has it been, do you think, Doug, on a scale of 1 to 10? We had a technical analyst on yesterday that basically said that has been a group not to really be in, and if you were just looking at tech, you might not be as bullish. And financials, great, others, great. But as far as tech goes, you might not be bullish on the overall market because of the action. Is that true?
We're still bullish on tech, and I would say on your 1 to 10 scale, Joe, I think DeepSeek Monday, 2.5 weeks ago, that was probably about an 8.5 or a 9. That was a pretty rough one. But I think since then, we've had things calm down a little bit. We've heard from a lot of the hyperscalers in terms of earnings. We've heard from the hyperscalers and from Sam Altman and others in the AI industry that this CapEx boom is going to continue. So I think the last couple of weeks have been much more stabilizing, and the next big event will be Nvidia earnings in a couple weeks.
So anything that's AI related, I mean, we've really only been focused on that for a couple of years. It used to be the Magnificent Seven wasn't always based on AI. So it's all AI now. Is everyone leveraged to the same extent, or some could do better? Some are more, if there was some type of disappointment, there's some that aren't as dependent on AI. What's going on with Meta, for example?
I think there's tiers in terms of the hyperscalers and how levered they are to AI. Meta, to your point, which is a holding in our LIVR ETF, as an AI play, they are highly levered, right? They're one of the leaders in open source AI with their Llama model. And so they've been using AI to improve their business. They've been building AI models to introduce to customers. Google, obviously, and Nvidia are also very heavily tied to AI. But if you're looking for hyperscalers that have maybe a little bit less exposure, I think Amazon and Apple are probably the two answers there. Although we did just see Apple made a deal with Alibaba, which was interesting, in China to bring their AI models onto the iPhone in that region.
So in terms of tariffs and everything else that we're talking about on a daily basis, these totally immune, or is that something to pay attention to?
I think you have to pay attention to it for the hyperscalers as it relates to tariffs, but I don't think you have to have, a kind of a 5-alarm concern about the tariff issue here. I mean, these companies, by and large, I think can get away with not being overly impacted by tariffs because they aren't really subject to some of the, I think, import and export issues that we're seeing with the tariffs, and they won't likely get hit with much of the tariff activity. And so I think from our perspective at Intelligent Alpha, we're paying attention to the story, but we're paying much more attention to how are the AI products that these companies are building evolving? How are the customers adopting them? I think that's much more important for the stocks.
One of the best performing stocks on the market lately is Nvidia's, which last year saw the largest rise in the Dow Jones Industrial Average, rising 171%. Why is this momentum occurring? The business has established outstanding leadership in artificial intelligence, AI, which may be the market with the highest growth and promise today. AI has the ability to revolutionize numerous industries and our everyday lives, and the $200 billion market is expected to grow to over $1 trillion by the end of the decade. For businesses in the sector, all of this might result in a considerable increase in income. Since Nvidia sells the goods and services, from processors to software, necessary to create and implement AI, its profits are already increasing. This has led to the internet giant's revenue increasing in the double and triple digits every quarter, setting new milestones that are far into the billions of dollars. As previously stated, the stock price has followed. However, the stock has recently pulled down from its peaks, something it has only done twice in the last 4 years. History tells us what is likely to occur next. Let's start with a brief overview of Nvidia's history to date. The tech player is the creator of the most powerful chips in the world, known as graphics processing units, GPUs, which are essential for AI tasks like model training and inferencing. In its early years, Nvidia primarily marketed GPUs to the video game industry, but it later branched out into other sectors after realizing how important these chips could be to other sectors. Furthermore, in order to become the one-stop shop for every customer developing an AI application, Nvidia developed a whole ecosystem of associated goods and services. Today, Nvidia is at the core of important AI initiatives and provides services to the largest tech businesses in the world, like Microsoft and Meta platforms. For instance, Nvidia was mentioned as a key technology partner when OpenAI and the US government recently announced a new $500 billion AI infrastructure project. So, what implications does this have for Nvidia stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
If it became a protracted trade war with China, that would be bad for some of these companies, very bad, I can imagine. I don't think that's really going to happen. I think, Trump, like he does so often, he wants to get something. And it may not even be that significant. It'll sound significant when he gets it. But do you see a protracted confrontation with China with the Trump administration?
I mean, I think if you look at Canada and Mexico as comps just recently, it certainly seemed like that was really more on the negotiating side. Not to say there won't be tariffs on those countries, but obviously both countries sort of agreed to change some of their border policies, and the tariffs got stayed for a month. And so I think to your point, Joe, I think that Trump is being a very hard negotiator here. He's not messing around. He wants to see action immediately. And so I would agree with the assessment. I don't think it's likely that we'll have a protracted trade war. If you're looking for what might be the hyperscaler or the mega cap tech stock that could be most impacted by that, you probably have to look at Nvidia, TSM, kind of how that region shapes out in terms of the chips that are produced there. They maybe have the most exposure if you're looking for that name. But again, I don't think that's going to be an issue in the next 12 months.
All right. So if I should buy, what's your top two that should be bought right now?
In terms of hyperscalers, the two that we own in the most size for our ETF LIVR are Nvidia as our top holding, and then Meta in the AI space. But I think there's another play on AI that is also worth talking about, which is we've talked so much about Nvidia. They're the bellwether. Everybody's paying attention to Nvidia and what happens there. But I think that the theme around the chips that the hyperscalers and others will use to deliver this AI technology to their customers will shift to custom silicon. And we heard Meta talk a little bit about it on their earnings call last week. I think you could see companies like a Broadcom, like a Marvell, which is also a holding. They could benefit from this theme. And so as the year progresses, I think that's a theme that's worth paying a little bit more attention to, this custom silicon opportunity.
As previously stated, Nvidia's AI capabilities have fueled stock gains and increased its valuation, causing the company to soar to over 75 times projected earnings expectations over the last 4 years. The stock's valuation has somewhat decreased as analysts' earnings projections have increased, and during the last 6 months, it has typically traded for roughly 48x forward earnings expectations. Let's look at the recent movement of Nvidia's stock. The stock has dropped and is now worth less than 30 times projected earnings. Over the last 4 years, it has only fallen below that level twice, first in the spring of 2023 and again around a year ago. History demonstrates that the stock then skyrocketed in the months that followed when such occurred in the past. If past trends are any indication, Nvidia's stock should shortly soar higher following the most recent fall and value decline. Naturally, it's crucial to remember that investors can't always depend on the past for direction. Investors have been caught off guard by stocks and the market as a whole. Therefore, before making any investment decisions, it is crucial to take into account a company's earnings history and long-term potential. In light of this, there is cause for optimism for Nvidia. I mentioned the company's impressive revenue and strong AI product and service offerings above. High sales profitability, with a gross margin that regularly exceeds 70%, is another benefit of this revenue. Nvidia has promised to upgrade its graphics processing units once a year. With the introduction of its Blackwell architecture, competitors will find it challenging to gain a sizable portion of the market. After its current lull and decline in value, history indicates that Nvidia stock is ready for a surge, which could actually occur. However, Nvidia's focus on innovation, market position, and financial strength, 3 factors that should contribute to long-term growth and stock performance, are what really make the business a good investment. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Looking through some of the issues accounting-wise, legally. Government's looking at them now. But the message about the market that they're in is still pretty compelling. I think there are a lot of investors desperate to find unloved AI plays. And it's still an AI play. And of course, it's definitely unloved since this whole thing happened. So I guess maybe that's why it's still catching a bid. Folks really want to find a so-called value trade, perhaps, within this category.
Right, and we do know like a week ago they did confirm they're in full production now of Nvidia's Blackwell rack scale AI computing system. That helps. I mean, like the fact that you can tie on to one of the most successful companies in the AI trade is huge. But I think that similar to what we've seen in some of these like third and fourth tier AI companies where you have to really consider as still repricing in this entire industry. What they do right now, I think, is threatened by the DeepSeek model. If we see less liquid cooling needed and we see less data centers, I mean, like with costs that are not as elevated as we thought, this name takes a hit from that.
Yeah, I think it's a very fair point. There are still questions to be answered on whether or not the more efficient, cheaper alternative is going to be used, and you won't need as much sort of, accessorizing of the machines.
That's right.
And the data centers. All right, good stuff. Thanks, Jenny.
Nvidia's market valuation has increased by an astounding $2.8 trillion since the start of 2023, because to the company's data center chips, which are the industry standard for creating artificial intelligence, AI. Following a steep sell-off over the previous month, Nvidia stock is already down 11% from its record high established in early January 2025. News that China-based research lab DeepSeek had discovered a method to train competitive AI models using a fraction of the financial resources and processing capacity of its American counterparts set off the sell-off. Investors were concerned that this would lead to a decline in the market for data center processors, which would destroy Nvidia's main business. Nvidia will release its most recent financial results for the fourth quarter of fiscal 2025 on February 26th. Based on the information provided, I believe some of the recent investor concerns will be allayed. Here's how I think the stock will respond when the news breaks. In 2023, Nvidia's H100 graphics processor, GPU, was the most popular AI data center chip globally, contributing to the company's remarkable 98% market dominance. Although it is still a bestseller, the H200 and a completely new series of GPUs built on Nvidia's Blackwell architecture replaced it. Developers can now implement the most sophisticated AI models to date, because to the Blackwell-based GB200 NVL72 system's ability to conduct AI inference 30 times faster than the comparable H100 system. Shortly after the general release of Blackwell at the end of 2024, NVIDIA CEO Jensen Huang informed investors that demand was insane and that, according on current information, sales are meeting expectations. But in January, the DeepSeek scandal shook Wall Street's trust. The V3 AI model, which the Chinese startup disclosed cost only $5.6 million to train, performs on par with some of the top models from American startups like OpenAI, who have spent tens of billions of dollars to get to this stage. Additionally, investors questioned if AI researchers actually needed the newest and greatest Blackwell processors because DeepSeek was using earlier generations of NVIDIA's GPUs. However, some of those worries have already been allayed by NVIDIA's biggest clients. Inference workloads, which are already using more processing power because newer AI models spend more time thinking, a process known as test time scaling, will counteract a decrease in training workloads, according to Mark Zuckerberg, CEO of Meta Platforms. Meta isn't going back, as it plans to invest up to $65 billion in AI data center infrastructure by 2025, up from $39.2 billion the previous year. With a record $75 billion in capital expenditures anticipated this year, Alphabet also intends to greatly raise its hardware investments. Amazon, on the other hand, recently informed investors that it may invest more than $100 billion in AI infrastructure by 2025. It's difficult to imagine a situation in which NVIDIA's financial results fall short of expectations if all of its major clients are dramatically raising their investments in chips and data centers. NVIDIA's fourth quarter sales is expected to reach $38.1 billion, according to Wall Street's consensus forecast, which is even higher than the company's own estimate of $37.5 billion. If past quarters are any indication, the data center segment, which is driven by GPU sales, will account for about 88% of total revenue. With the Q4 results, NVIDIA's total revenue for fiscal 2025 will reach a record $129.3 billion, a 112% increase over fiscal 2024. However, Wall Street will also be intently monitoring the company's future prospects. It will be a positive indication that DeepSeek's worries are largely unfounded if management's outlook surpasses the almost $42 billion in revenue that analysts are currently projecting for Nvidia's fiscal 2026 first quarter. Over the course of the following 5 days, Nvidia's shares dropped 7% after the company's final third quarter results were released on November 20th. Any stock's short-term swings are essentially noise, and 2 weeks later, Nvidia had nearly fully recovered. It highlights how crucial it is to keep an eye on the big picture, particularly when dealing with a potential like artificial intelligence that is probably going to take years to develop rather than weeks or months. The recent decline in Nvidia stock due to DeepSeek has presented investors with an alluring opportunity. The company is presently trading at a price-to-earnings (PE) ratio of 51.1, 13% below its average PE ratio of 59.2 for the last 10 years. Additionally, Nvidia's stock is trading at a forward PE ratio of merely 29.2 because Wall Street anticipates the company to generate $4.40 in earnings per share during the current fiscal year 2026. Stated differently, if Wall Street's projections are correct, Nvidia's stock would need to increase by 102% this year in order for its PE ratio to be in line with its 10-year average. Nvidia's stock is probably headed for new record highs in the coming months if its Q4 report provides more proof that DeepSeek-related advancements aren't affecting the market for GPUs. The upcoming report on February 26th is much more likely to be a positive surprise than a negative one, in my opinion, given the recent commentary and capital expenditure projections from the company's largest clients. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.